For every cumulative doubling in the number of units produced, battery cell costs will fall by 28%. Electric vehicles have hit price parity with gas-powered vehicles. Consensus estimate was off by 400%. Right here, we're looking at the EV price forecast based on Ark's calculations in 2027. Average selling price for an electric vehicle under $20,000. This video will age well. We're looking through Ark Invest Big Ideas 2023 report, specifically focusing on their predictions and assumptions around electric vehicle adoption and prices. Many of these predictions sound completely absurd, just absolutely ridiculous, impossible. Yet I believe Ark is on the money. If they're right, and even if they're wrong by a massive margin, but still more right than most of the so-called experts, spoiler alert, they will be, it's only a matter of time before legacy automotive manufacturers universally find themselves in a death spiral with collapsing ICE sales, bleeding tens of billions of dollars, struggling to transition toward EV production, and hopefully at the end of this ordeal, many of them will finally understand what exponential means. If you own Tesla stock, or any EV stocks, or any legacy automotive stocks, or you just like learning about disruptive, innovative technologies and exponential adoption, this video is a must watch. I'm sure most people watching will understand that facts don't care about your feelings, and in this video we'll be looking at a lot of facts and a lot of data, including historical trends and some future projections. For some strange reason, it seems none of the so-called experts making predictions about the future are looking at any historical data. They've been wrong, and when I say wrong, I mean wrong by serious margins. Yet instead of looking to the past and going, we thought this would happen, but this happened, maybe we need to tweak our methodology here in future predictions. These dimwits have not learned from their past mistakes and continue to embarrass themselves year after year after year. What's that saying? You can lead a moron to water, but you can't make them think? Something like that. And just a quick side note, I highly encourage everyone watching to continue to track what's happening with EV adoption, battery cost declines, EV prices, and overall trends. And on that note, if like me, you really like to optimize your health, track everything, have some data and be able to make improvements, I highly recommend you guys and girls pick up an Oura ring, which you'll have seen me wearing in my videos for the last 18 plus months. Oura ring allows you to track your sleep, readiness, and recovery. I've been able to massively improve my sleep quality, my resting heart rate, and many other meaningful biomarkers as well. Click the link in the pinned comment or go to auraring.com/SMR. That's OURA ring.com/SMR. Thank me later. And if you haven't seen the latest exclusive video over on Patreon, check it out. It's a letter from 22 years ago. Almost seems as if it was written yesterday. If you're a Tesla investor in particular, you'll find it highly relevant. Electric vehicles, defying the skeptics with exponential growth. Investors once questioned whether the future was electric. Some still are, just for the record. Demand for EVs has scaled despite a pause in cost declines caused by commodity price shocks. Now, investors doubt whether or not the growth will be exponential. The debate around electric vehicles has shifted from demand to supply. Based on Wright's law, Ark forecasts, listen carefully, Ark forecasts that EV prices will decline and sales will increase more than sevenfold or 50% at an annual rate, from roughly 7.8 million in 2022 to 60 million units in 2027. I can count on one fingerless hand the number of legacy automotive manufacturers and Wall Street experts / analysts, anything but, who would think even half this amount is feasible. Of course, Ark could be wrong. I mean, I'm sure they will be by some amount, but there seems to be a gaping chasm between what's likely to happen, close to where Ark's at, and what most of the so-called experts and analysts think will happen. Oh, and same is true of the legacy automotive manufacturers, many of whom still think they'll be producing ICE vehicles beyond 2030. They're in for a rude shock, aka a bankruptcy filing before that date. The biggest downside risk to our forecasts are supply constraints that could continue to impact pricing and the speed at which traditional automakers transition to electric vehicles. Electric vehicle sales continue to take share. We're looking at growth in global vehicle sales. This includes gas-powered and electric vehicles. We're looking at the percentage change year over year. In 2018, ICE vehicle sales were down 1.2%, while electric vehicle sales were up 69%. In 2019, ICE vehicle sales collapsed by 7.2%, while electric vehicle sales were up 18%. In 2020, ICE vehicle sales collapsed 16%, while electric vehicle sales were up 33%. And in 2021, following the scamdemic, ICE vehicle sales rebounded a whopping 1.7% year over year, while EV sales were up more than 100%, 112% to be exact. 2022, ICE sales down 6.9%, EV sales up over 60%. The trend here is pretty clear. It's important to understand that in the early days, for example, when there's like almost a single company producing most of the world's electric vehicles, you're going to have a lot of lumpiness as they ramp up their production. But over time, as more players enter the market, this rate of growth is likely to stabilize. Again, Ark expecting about 50% compound annual growth rate in EV sales between now and 2027. If you do the reverse on that, I think what Ark are trying to sort of imply is that ICE vehicle sales are currently and will continue to collapse. Legacy automotive manufacturers seem oblivious to this fact. Just to be super clear, on this chart, thankfully, gas-powered category also includes gas-powered vehicles with a vibrator-sized battery in them, also known as hybrids, because after all, they are internal combustion engine vehicles, and a really fucking dumb idea. Made sense about 15, 20 years ago, doesn't anymore. Global automakers have increased investment plans for EVs and batteries more than tenfold over the past 4 years. At a historic auto industry capital efficiency of $14,000 per unit capacity, the annualized $600 billion earmarked for EV investment would equate to 43 million units in annual production per year. If all automakers were to realize the capital efficiency associated with EVs, again, less stuff goes in them, in theory they should be much cheaper to produce, and that includes the cost of capital per unit of production capacity. 600 billion would accommodate 86 million units, approaching total auto production today. On the left, global automaker investment plans for electric vehicles and batteries over the next 10 years. I notice a trend. Up significantly. And on the right here, annual EV production capacity. This is basically just determining if it costs $14,000 per unit of capacity based on current investments. Annual EV production would reach around 43 million units. However, if automakers aren't completely brain dead and can average $7,000 per unit of capacity, currently announced investments, if these were sustained, 86 million units of EV capacity, which is basically the entire global automotive market today. The accurately named Wright's Law, as opposed to Wrong's Law, sorry, that was really bad. I'm making dad jokes. Wright's Law has modelled the decline in battery costs accurately and points to LFP cells as the dominant chemistry. Well, duh. The largest cost component of an EV is its battery, the declining cost of which will be critical to reaching sticker price parity with gas-powered vehicles. According to Wright's Law, this is very important, by the way, for every cumulative doubling in the number of units produced, battery cell costs will fall by 28%. Despite the recent commodity spikes and associated battery price increases, this relationship should persist over the long term. At a lower production base, lithium iron phosphate cells could accelerate the cost and price declines. Now, before we get any further, I just want to do some quick math. We heard earlier, 7.8 million EVs sold in 2022. Ark expecting around 60 million in 2027. That's 3 doublings from 2022. 3. Not 1, not 2, 3. Now, even if you're a skeptic and you don't believe that this Wright's Law will continue to have this incredible predictive power, because I mean, hey, stranger things have happened, right? Just play along at home. We are seeing historical data on this chart up to about this point for each of the different battery cell chemistries based on cumulative kilowatt hours produced and the total cost per kilowatt hour, and then projections into the future. So historically speaking, there does in fact seem to be a fucking astonishingly consistent trend of declining costs. I mean, like for real. The lines we are seeing plotted on this chart up to this point are historical facts, not predictions, facts. This has already happened. And keep in mind, this is a logarithmic chart, meaning order of magnitude changes along the side. This isn't linear, it's literally exponential. Now, going back to the comment about 3 doublings from where we are today until 2027, what would that do to the hypothetical cost of the batteries required for an electric vehicle? I'll use some round numbers just to illustrate the point. I'm not using actual numbers, so please don't be a Poindexter. This is just to illustrate a point, that's all. Let's just assume that the current cost of the batteries going in a typical electric vehicle in total, the battery pack, is about $10,000 because it's a round number. Should that $10,000 cost decline by 28%, 3 times, with each of those cumulative doublings, 3 of them, between now and 2027, that would mean $10,000 worth of battery today would cost about $3,700 in 2027, almost a 2/3 reduction in cost of the most expensive thing in an electric vehicle. This matters. Wright's Law points to faster EV charging rates. Ark believes that EV charging rate is a good proxy for overall performance, capturing the efficiency, range and power capabilities of the system. In the past 4 years, charging rates have improved nearly 3-fold, from 40 to 15 minutes for 200 miles of range. During the next 5 years, it could drop nearly 4-fold to, wait for it, 4 minutes. You heard that right. Charge 200 miles of range on your electric vehicle in less time than you last in bed. Ark continues to point out the obvious. As EV charging reaches an acceptable rate, Ark expects the industry to optimize for other features like autonomous driving, safety, and entertainment. Aside from price, and we'll get to that, we've covered that and we understand that, but aside from price, The Achilles heel of EV adoption, in the minds of many consumers, even though it's not that big of a deal, is charging times. Most consumers charge at home, they've always got a full charge. Occasionally on a road trip, they might have to stop at a supercharger or somewhere else. I was going to say to recharge, but if you stop anywhere else, the charger's usually broken, so you're fucked. But anyway, you may have to wait 15, 20 minutes or so to recharge your vehicle. This is a slight pain in the ass. Not a deal breaker for many, but it is for some. However, if you can charge an electric vehicle in about the same amount of time it takes to fill a gasoline vehicle, it's game fucking over. It's the last obstacle to widespread adoption besides price, which we've just discussed. On the right here, we are looking at EV charging rates. Again, we are looking at historical data points and a forecast. In blue here, we have what has actually happened from 1915, 1999, 2018, 2021. Again, logarithmic chart. Order of magnitude changes on both axes, okay? So, the trend does seem pretty clear. This is something I don't think most people are anticipating. And now, far and away, the single most important slide in this entire deck. Electric vehicles have hit price parity with gas-powered vehicles. What we're looking at on the left is a new vehicle transaction price on average versus the least expensive EV with a 300-mile range or more. Now understand, this isn't the average electric vehicle, but that's irrelevant. We're now talking about price parity. Not what's the cheapest or most expensive, but can you purchase a comparable vehicle, e.g. with 300 miles or more of range, for less than the average new vehicle purchased? And the answer is yes. You guys remember for the last few years I've been saying we're about to hit EV price parity in the next few years, and then after that, costs will continue to plummet, and then you'd literally need to have brain damage as a consumer to not buy an EV, because you would be voluntarily paying significantly more for an inferior product that's worse for the environment. And at that point, if consumers would need brain damage to buy these things, automakers would need brain damage to make these things, and they'd certainly need severe brain damage to be relying on profits from the things they plan on making when they'll no longer be making them, because consumers won't be buying them because consumers are not that dumb. This is a really catastrophic situation for legacy automotive manufacturers. The writing's been on the wall for years. After all, these costs were predictably declining over time. Keyword predictably, but for some reason, most automakers just seem to ignore the evidence. We're at a tipping point. Everything has now changed. This point right here, a Tesla Model 3 now, has hit price parity with the average new vehicle transaction price. And again, the costs for electric vehicles are continuing to decline predictably over time. The opposite is true of ICE vehicles. And of course, as less consumers buy ICE vehicles, reversing economies of scale come into play. The cost to make these things goes up, the profitability goes down. It becomes even less compelling to buy an ICE vehicle. This really does not end well for legacy automotive manufacturers. Now over on the right here, models of light-duty electric vehicles in the US with range of over 300 miles. This isn't sales, this isn't percent of market share. It's literally the number of models sold by each manufacturer. Notice Tesla today still only has 4 individual vehicle models on roads. That's it, just 4. Again, all you need is one category killer per category. And we've seen a huge proliferation of electric vehicles in the US with 300 plus miles of range beginning in 2022. This just goes to show you, ladies and gentlemen, how many years behind Tesla the so-called competition is. In 2016, literally just Tesla. 2017, just Tesla. 2018, just Tesla. 2019, just Tesla. Hello guys, where are you? Where's the competition? I thought it was coming, not over itself, but for Tesla, where is it? Hello. 2020, just Tesla. 2021, Ford, stunningly, debuted their first electric vehicle in the US with more than 300 miles of range. And 2022, suddenly out of absolutely fucking nowhere, a bunch of automakers released their first and or second models. Better late than never, but 1, 2, 3, 4, 5. Tesla had the entire US market to themselves for 5 years. 5 years before the first other company released a 300 plus mile range vehicle in the US. It is literally a fact that the so-called competition is half a decade behind Tesla. And another of my favorite slides. Battery cost decline should continue to drive exponential growth in EV sales. Now, let me orient you guys and girls around this chart. A little bit confusing to understand at first. On the left, we're looking at percentages in terms of what percent of global revenue share electric vehicles represent versus the actual market share of electric vehicles. So revenue share of global vehicle sales versus market share. And along the bottom here, we have purchase price, as in $100,000, $80,000, $60,000, $40,000, $20,000 electric vehicle, and a free electric vehicle. Not quite sure we'll get there. Maybe close one day, but not quite. So what we're seeing here is in the range between $100,000 and $40,000, give or take, up to about here. EVs representing, I don't know, call it 7% of global automotive revenues, maybe 6% of market share. Why? Well, there was an EV price premium. Makes sense. But look what happens here. Once we go from the $40,000 vehicle to say, let's call this about $30,000, somewhere in the vicinity of $35,000 to $25,000, the market share absolutely gigantic, going from well under 10% global market share to around 50% global market share what's that saying? A linear decrease in price causes an exponential increase in demand. I think that's exactly what we're seeing here. No, that literally is what we're saying here. See this thing here? This is what happens. Very few consumers can afford a $100,000 vehicle. Same is true of an $80,000 vehicle, but a few more can. Same is true of a $60,000 vehicle we find ourselves today. $40,000 within reach of many more consumers, but the tipping point, we're just about there, ladies and gentlemen. Right here, we're looking at the EV price forecast based on Ark's calculations in 2027. Average selling price for an electric vehicle under, one more time, under $20,000. And at this price point, EVs probably more than 70% global market share by 2027. So you may be wondering at this point in time, how does this align with my own estimates? And what do you know? My Tesla valuation model, which has been and continues to be available exclusively on Patreon to supporters at the investor level and above, has a table, long-term vehicle lineup, average selling prices, annual sales potential. And I have the 3 and Y base price over the long term, eventually falling to $35,000 a pop. Next gen vehicle, around $25,000 a pop. Now this isn't the cost to produce, this is the cost to purchase with a healthy 30% margin. And following the next gen vehicle from Tesla, which we're going to hear about soon, in fact in literally 1 month, a subsequent generation of vehicle with a base price of $18,000 late this decade. Now, it appears that Ark Invest is exactly where I'm at. Imagine that. How'd that happen? How could we possibly have drawn the same conclusion? There's no way Ark Invest are taking notes from my videos, so how did we deduce a very, very, very similar number? How could that possibly happen? What a coincidence. Oh wait, it's not a coincidence because the cost of electric vehicles are predictably, keyword once again, predictably declining over time. By the way, ladies and gentlemen, you want to go fact check me. If you've got a copy of my valuation model sitting on your hard drive, find the oldest version you've got, dig it up, look at the table. It's all there. How could I possibly have anticipated this once again? Predictable cost declines. The reason I'm hammering this point home so much is because this has been obvious for years. Yet for some inexplicable reason, essentially every single legacy automotive manufacturer on the fucking planet has just ignored this and continued full speed over the edge of a cliff. You guys understand, when a compelling electric vehicle, the average price is under $20,000 later this decade, it is absolutely game fucking over. Back to my obnoxious comments that consumers in the near future, in a few years time, will literally require brain damage to buy an ICE vehicle. A compelling electric vehicle will be about half the price of what a comparable ICE vehicle is today. In 2027, half the price, not 10% cheap, not half the price. One of the more embarrassing slides, not because of what Ark said, but because of what they're describing. Although EV sales have scaled exponentially, facts, the consensus forecast, many of these experts appear to be suffering from a severe case of small brain syndrome. In 2017, Ark forecast that global sales of EVs with 200 plus mile range would approach 17 million in 2022. A global scamdemic, supplier challenges, commodity price spikes, and the consumer preference for longer ranges limited unit sales to around 8 million, still 4 times the consensus estimate in 2017. In other words, Ark's forecast was off by 45%, but the consensus estimate was off by 400%. I just want to take a quick pause here because many of my predictions are going to age as well as Ark's do. Large margin of error, but I'm not judging myself relative to what actually happened. I'm judging myself relative to the expert and consensus estimates, their opinions. Like Ark, I'm not going to be perfect. My Tesla valuation model, the ramp, the production rates per year could be off 20, 30, 40% some years. It's really hard to predict this exponential curve. But as Ark rightly points out, the so-called experts today are off by an extraordinary amount. Expert forecasts were 10 times further off than Ark's. Ark continues. Now, look at the difference in forecasts for 2027. Will EVs be 25% or 65% of total auto sales? On the left, global EV adoption curve in 2017. So this is the point on the chart where we go from historical data to predictions. So these were what the experts, the so-called experts, were predicting back in 2017 in black. This is what they were predicting. Less than 2 million electric vehicles sold in 2022, when in reality about 8 million were sold. So that was a linear forecast. Small brain syndrome on full display. What actually happened was exponential increase. Guess what, ladies and gentlemen? On the right here, history will in fact repeat itself once again. Historical EV sales prior to 2023, and now we have EV adoption forecasts from 23 to 27. Once again, these morons, and I just don't know how else to describe it, morons are ignoring reality, ignoring data, thinking they know best, and once again, projecting linear adoption. By this point in the video, you guys surely must understand, if the cost of these things is declining predictably over time, and it is, they're already at price parity and they are, and the cost will continue to fall. Once again, consumers will literally need brain damage to keep buying these things in a few years' time. Yet the experts think they're going to be. 2027 expert forecast today, give or take about 20 million EVs sold in 2027. It's about 1/5, maybe 1/4 of the global automotive market. In 2027, spoiler alert, flip these numbers on their head. Actuals will be closer to 60-70%. So just to recap, Ark's forecast, 60 million electric vehicles sold in 2027. Expert forecasts, 20 million. Back to Ark's question, will EV sales be 25% or 65% of total auto sales? Only time will tell. Internal combustion engine, ICE vehicle sales are likely to lose significant share. I think this is the page in which Ark explains price parity, declining costs, much cheaper, brain damage, consumers, that whole spiel, just probably in slightly nicer words. Let's read on. By 2027, auto buyers probably will conclude, unless suffering from severe brain damage, that used cars or new EVs will make more economic sense than new ICE vehicles. If so, the drop in ICE vehicle sales could set in motion a death spiral for many incumbent automakers. Yep, they said it. Consumers will need brain damage, therefore legacy automotive manufacturers are unequivocally fucked. They didn't use those exact words, but that is what they said. In response to falling prices, consumers could delay EV purchases or purchase used cars at the expense of new internal combustion cars. So let's take the time to examine this chart. We're looking at ICE unit sales here in the darker blue. Basically the entire market, 2015, 16, 17, 18, 19, they're still almost the entire market. 2021, still almost the entire market. 22, most of the market, but 2027, completely flipped on its head. I just want to emphasize this tiny little speck. That is a fraction of the automotive market that Ark believes in 2027 will still be ICE vehicles. And I think they're on the money. We're also seeing this section, which is what would have been ICE vehicle sales, assuming consumers didn't do the math and go, wait, do I have brain damage? No. Oh, then I'm not going to buy a new ICE vehicle, even though I'd like to buy a new vehicle and can't quite afford an EV yet. I'm just going to delay my purchase of a vehicle until I can afford an electric vehicle and buy that instead. Death spiral is an understatement. I don't believe there's a single legacy automotive manufacturer on earth who understands this. At least none that are willing to say it out loud, lest they scare investors out of their stock and see the stock collapse 95% in an instant. And lastly, planned investment levels should support a 7-fold increase in EV production from 7.8 million to 60 million during the next 5 years. If Ark's forecasts for 2027 are correct, EV unit sales will scale at 50% during the next 5 years, curiously exactly in line with Tesla's own compound annual growth rate goals. It's almost as if both Tesla and Ark had brains, used them, did the numbers, looked into the future and had a pretty decent understanding of where EVs would be heading. Just want to emphasize here, Ark's prediction, 60 million units in 2027. Now, look, it could be 40 million. It could be 75 million. We don't know. Long-range predictions with exponentially growing technologies. Very hard to be on the money. Exponential growth is like that. However, what we need to focus on is not Ark's margin of error. Is it going to be 50 million, 48, 62, 69? Who knows? But how far off reality are the so-called experts? The forecasts, which as we saw just a few slides ago, linear, exponential, it's a way to ignore reality. Global battery electric vehicle sales in 2013, so small you can't see it. That's what she said. 2014, 15, 16, spec. Even in 2022, still a spec. But look where we get to by 2027 at a 50% unit compound annual growth rate. 60 million electric vehicles in 2027. Of course, absolutely no one knows what will happen, but that doesn't mean we can't take an educated guess. Now, my personal guess is that Ark will be a little bit too bullish on this. If I had to throw a number out there, maybe 50 million or so, again, I got no fucking idea either. I am making my own predictions. In fact, I don't publish these, but I do privately model out EV adoption just to give me some insights as a sanity check for my valuation model. Let me bring this up now. Haven't touched this now for these estimates for a year or two, but let's have a look. EV adoption. Are you fucking shitting me, bro? The fuck? Really? Damn. I'm going to screenshot this. 2027, 57,655,209 electric vehicles sold. What's with these weird coincidences? It's almost like if you think and factor in declining costs and do some modeling in your mind and use a spreadsheet or two, you can actually estimate things and draw similar conclusions. Now for the record, that was my base case. I do have a bearish scenario and a bullish scenario, but that's where I think things will land roughly. Keeping in mind, I had not updated this for about a year and a half. I don't know if we're quite going to get to that 57 plus million unit range, but in the interest of full transparency, that's where I was a year and a half ago when I last looked at this stuff and made my projections. Curiously, I'm just looking now, in 2022, I actually had predicted 6.122 million EVs sold. The actual figure was 7.8, so I underestimated. In fact, this is embarrassing, but I'm going to say it anyway. My 2023 estimate for EV sales was 7.806 million units, which happened a year earlier. Awkward. So, will Ark Invest be wrong? The question isn't, will they be wrong? I mean, every prediction ever is always wrong. The question is, how wrong will they be? And the better question is, how wrong will the so-called experts be, including the geniuses who collectively forecast linear EV adoption moving into the future, who have been forecasting linear EV adoption, which has turned out to be exponential. How wrong will the legacy automotive manufacturers be, who are still intending on producing internal combustion engine vehicles far beyond the point where consumers will literally need to be suffering from brain damage to actually buy them? How wrong will the 150 IQ Wall Street analysts be, Extremely. Correct me if I'm wrong, but I think it was Morgan Stanley who very recently suggested they still believe around 70% of new vehicles sold in the US in 2030 will still be ICE. It is my opinion that there is currently a gaping chasm between perception and reality. So few people are willing to accept how quickly this EV adoption is happening already. None of the experts seem to be learning from their past errors. People seem to be emoting rather than thinking, feeling rather than looking at facts, data, and projecting into the future. This is a recipe for disaster. My primary thesis on EV adoption has been summed up in this single presentation. Costs are predictably declining over time. EVs are a new technology, meaning there's a huge amount of room for cost reductions. This is not true of ICE vehicles, which have been manufactured at scale now for more than a century. EVs have far fewer moving parts than internal combustion engine vehicles. They're more expensive today because people haven't figured out how to make them cheaper. EVs have just hit price parity with ICE vehicles, and their costs will continue to precipitously and predictably decline from that point. By 2027, Ark Invest expect the average price of an electric vehicle to be under $20,000, which is less than half of the average new vehicle price today. Half, not 10%, not half. So once again, I'm going to say it. Any legacy automotive manufacturer today who still expects to be selling any ICE vehicles beyond 2030 is unequivocally f***ed. I'm just kidding, they're all f***ed anyway. Some are just far more f***ed than others. The writing's on the wall and just about everybody seems to be illiterate. Out of interest, let me know in the comments below. Two things. In 2027, how many electric vehicles will be sold globally and what will be the average price of those vehicles sold? Let me know in the comments below. I'd love to hear what you guys and girls think. Once again, I just want to put this on the record. This video and Ark's predictions will age rather well. They won't be perfect, but I tell you what, they're going to be a lot better than most of the so-called expert predictions, including the forecasters, the Wall Street analysts, those in the finance media, and many of the armchair Einsteins explaining how Tesla's going bankrupt, the competition's coming, EV this, EV that, too expensive, blah, 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 not enough range, charging too slow, blah, blah, blah. And just finally, if you'd like to impersonate a legacy automotive manufacturer and ignore the data, pay no attention to what's going on, and just blindly lead yourself off a cliff, definitely don't grab an Oura ring with the link in the pinned comment, because that would allow you to track your sleep, your readiness, and your recovery, and make adjustments accordingly, improving your situation rather than making it worse. Check out the link in the pinned comment. And lastly, if you'd like more exclusive content, including access to my Tesla valuation model with a lot of these long-range predictions, which strangely align quite closely with Ark's, you can join Patreon with the card in the corner or the link at the pinned comment, and I'll see you over there. Love ya.